Hey guys, what's up? This is Andrew for TRENDLINES.com. So I'm very excited today because we had our first margin call on AMC. So I'm going to explain to you guys why I think this is a margin call. I'm going to explain again what I showed you guys 2 days ago in my video when I talked about correlation with the global market and that the global sell-off could trigger some margin calls for hedges that are buying the dip. And I think that this is what is happening and it is likely to continue. So let's get into it. All right, let's start guys with the chart. I have many things I want to show you. So this is AMC chart. So very quickly guys, 1, 2, 3, 4, 5. All right, Elliott discovered 100 years ago, roughly a bit less, that market developed in 5 waves. And here we have 1, 2, 3, 4. I mean, there's a fifth coming. It's really looking like this. So then we zoom in and we try to understand how this fifth wave is gonna develop, probably in 5 waves. We have identified the first move up, the second move down. Here, once again, this is a tricky market, all right? Usually, let's say we have less fake outs. In AMC, we have a lot because of trading algorithms that are running on this market, because there is a lot of money involved there. And those algorithms that have been calibrated to, push you out whenever it's time for them to reload or to take some profits. This is how they work. So here, the retracement level was the 78.6%, which is unusual for a second wave. Once again, you can see this information here, guys. ELLIOTT wave, frost and pressure. I've shown you that many times, but I will keep showing you guys this because maybe some of you are new. It's important that you are aware. So I click on the third link. I go to the page 79. All right. And here, guys, you have, the kind of the retracement, the usual retracement. The second wave usually go to the 61.8. So we went slightly lower, which to be honest, I didn't like personally, because we had here, so 61.8 was 38 and 38 was a strong support. So I really wanted to hold above that. We faked out. This is, guys, a typical fake out. So it probably got some traders out of the trade, and which is bad for them, but they are not apes for sure. And here we can see that we were close to the breakout level, all right? So the breakout level is also a level that is usually acting as support. It was slightly higher, around 35. So basically we went to this area, and then guys, look at what happened. So I'm on the 4 hours time frame, so massive volume, massive move up. Guys, this move up, it went, all right, 22% up from the lows to the highs, relentlessly. So what is it? It's a margin call. The way I see it, I check the SPY. You can here add compare, and you can compare 2 stocks between them. So I'm going to choose here to keep this scale. So I know it's not easy to see, but what is interesting is here I'm on the 15 minutes time frame, and I want to see, I'm going to use this vertical line to see whenever the AMC move up happened. So here you can see, so this is yesterday's session. We started here. So yesterday the S&P was just going lower. AMC was going lower too. And you can see here, guys, we have this trend line. Okay. I don't know if you see it well. Let me put it in blue. This trend line, and it got broken, guys, here. Look, this is the 15 minutes time frame. Go check it out, guys. It's very interesting. This is a beautiful example of how financial markets are working. And I'm going to show you again how to find this information before it was happening. But first, breakout of the S&P 500 here. Okay. So exactly so let me do the US time. All right. So on the New York time, it was at, guys, the breakout on the S&P 500 occurred at here. Okay. At the lowest level on AMC, AMC was down 15% and we had the breakout. And then, guys, look right after. So the volume is not coming from here yet, but here we have suddenly, so the volume is picking up, S&P 500 is diving, and AMC starts to go higher, and bam, here on this move down. All right. So here there was still some hope that the S&P 500 goes back up, and on this move down, here. So what is happening here? I'm going to explain. You can see that massive volume and we bounce back at 38. So here you can see that the massive move up comes from the retest. So guys, hedge funds, they know TA, right? They know how it works. So they just bought the retest. So this move up destroyed everything, guys. Everything. It's the biggest move up I've seen for some time. So it's very, very good for what's going to come. I'm going to give you my targets very soon. But you can see that here we destroyed both resistances. We went much higher, and then on the retest, hedges bought again. And maybe not only hedges, maybe some, just long investors. So this is looking very good. Let me show you guys this. Then I'm going to show you some options that are interesting to make here. So bam, I want to show you the correlation. So once again, guys, I've shown that on Jackson Hunter's YouTube channel when I was live. It was the first time I was showing these results. They are very interesting. So look, here I compute the monthly correlation between the returns of the S&P 500, SPY, and AMC. Okay, so roughly they are positive. Fair enough. But we can see, and in green, I have the monthly return of AMC. I just take monthly so that it smooths everything. Otherwise, I just have bars everywhere. It's not readable. And we can see that mostly the correlation, which is here in blue, and you can see the correlation axis on the left, is mostly trading at positive levels between 0 and 80%, so roughly 50%. But sometimes this correlation is going lower, as here, or here, or here, 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 and maybe now. And each time it went lower, look at the returns, guys, going higher. Correlation lower, returns higher. Correlation lower, much lower, returns much higher. Correlation lower, here returns a bit lower, but then higher. So each time the correlation drops, it triggers some massive moves up on AMC. Okay, so this is what we know. And look where we are here. We are here in terms of correlation. So roughly at the levels where it's usually dropping. Roughly at the levels where usually we start to have this strong moves up coming. You can see that yesterday AMC was up 7%, S&P was down 1%. So the correlation, which is here, dropped from 48% to 32%. And we're going to turn negative soon if this continues. So now let me show you quickly my TA on the S&P 500, because now you guys understand that this is very linked. I mean, you knew before, right? But now there is no more doubt about that. So if this is linked, we can either do TA on AMC, which is, some of you say, not working. And I agree, it's tough because there are a lot of tricks, or do some TA on the SPY, which is much easier. So here on the SPY, guys, if you haven't seen that yet, you can go and check. I did 1 or 2 videos update about the SPY. I gave you my view when we had the first drop. I'm bearish, guys, for the coming month. I think we're going to keep dropping. I'm going to personally start to buy share at 420, 400. So once again, for those who are interested, we are doing that in Discord. It's not easy. Let's be honest. We started to trade here, guys, at the top of the market. So very tough markets. We are still overperforming the S&P 500, which is what we are trying to do here. And what we're going to do is we're going to reload massively, guys, whenever we are lower. It's not the right time for that. But anyway, and AMC, I'm going to show you as well. So here, yeah, first, we broke out, guys, some ITA very quickly on the SPY. I have a few more fifth wave to come that go much higher, but right now we are correcting. We dropped from the wedge pattern that was here. We broke it, retested it, and we are now moving lower. So we're probably going to lose 2 or 5 more %. And if this happens, AMC would probably skyrocket. And we have the breakout here on AMC. So TA on SPY is bearish, TA on AMC is bullish. And we know that whenever AMC strongly moves up, the S&P usually strongly moves down. So we have everything, guys, here that is looking good. Now let's go have a look first on the synthetic short interest. So we have a DTC of 1.6, 100 million shares traded yesterday, but the DTC is still high. I take the monthly DTC. So the synthetic short is 6.7%. Once again, I retrieved that from the option market, guys. So here we can see that we have some big strikes at 50, 60, and 70 with a small delta. Once again, look at the delta, 7%, 4%, 3%, 16%, 20%. So if AMC moves higher, this is going to create a lot of bullish momentum. Market makers would need to buy. So we have hedges that are going to buy, because hedges, what do? They buy the dip on the market. They have always been doing. And when you do that, sometimes you just need to cut your position at the worst time and stop all of your other orders or positions. So you're going to cut what is still possible to save. So typically a short position on AMC. So this is the reason why they are cutting it. It's because they buy the dip on the rest of the market. So just here, coming back to the synthetic short interest, so 6.7%. The regular short interest, we don't know it yet, but it's 19%. It might be lower now because some margin calls have been triggered. So we're going to analyze that soon whenever the next data is released. I'm using 15th of September data. So for now, we're still not having new data to use. And once again, the bullish momentum is at 50, 60, 70. So this is the levels where we need to go for this fifth wave, guys, to be really, really happening. So in this fifth wave, we are now playing the third. So I expect the third wave to go to the 70, maybe even higher. Depending on how high we go, we then gonna readjust the target. For now, the target is 130, but of course we can go much higher if things really go wild. That's it for me, guys. I hope you enjoyed this video, and I see you very soon to discuss the next move up on AMC. Stay close to shore.